Secretary of the branch, C.H.G. Vasudevamurthy, my committee colleagues, past chairmen of the branch, senior members of the profession, and all the members present today for the virtual seminar on peer review in compliance with auditing standards. Peer review, an audit which will be taken by auditors on auditors, by a chartered accountant on a chartered accountant. So the procedure, compliances and all, as whoever the firm is peer reviewed has already known, it's a very simple procedure to be followed. But compliance part, how the peer review documentation to be kept, what are the areas relating to the peer review, the client files, we are keeping the client files, how those are to be maintained in compliance with the auditing standards. Today we have with us B.Shekkizar sir, who is the excellent speaker for us on this topic. Not only on this topic, but any topic, he will update himself up to date anytime for any issue. We are very much fortunate, sir, for having your acceptance to address our members today for the Visakhapatnam branch. I request Treasurer Prashant to introduce the speaker.
Good evening, Chairperson, all the members who joined in the CPM seminar. Good evening to all. C.Shekkizar Balasubramaniam is a director of Deloitte. He is in investing management, business growth and mergers and acquisition consulting. Recently, he has performed certain roles in investing companies on behalf of the funds like venture capital, private equity and sovereign funds. He has served as an advisor, board member for IT-enabled services, infrastructure companies, and professional service firms. His experience includes serving large manufacturing and serving companies. He was also involved in establishing of sales services like BPO practices. He has also served as CFO and entities including venture capital funds. He has been a trainer for the director on the board of companies. He has served as a resource person for ICAI initiatives. He was the co-programmer director of workshop for communicating impact of IFRS implementation to fund managers and analytics. He has been a regular guest faculty at National Institute of Securities Market, Mumbai, Administrative Staff College of India, XLRI Jamshedpur for the period 93 to 97, and regular speaker in seminars and conferences including FICCI, including management development programs of large companies. He has been involved in designing and implementation of global leadership development program of large BPO companies and also CFO development for large groups. He was a faculty at the leadership development program of ICA 2003 to 7 on managing, changing and change of conflict. He has served as a committee member, secretary of the Hyderabad sub-chapter of International Physical Association, IFA, and AP Tax Association. He was a special invitee to Accounting Standards Boards of ICAI for the year 2019 to 2010, 9 to 10. He was a co-opted member of Committee of Accounting Standards for Local Bodies and Editorial Board of ICAI, New Delhi. He was the Regional Council member at ICAI South during the 2013 to 2016. He has also been faculty for a CPA US program for many years. With these few lines, I'm happy to introduce Shekkizar Balasubramaniam to the August gathering. Thank you very much. I'm requesting the speaker, please proceed for the seminar.
Online meeting.
You are able to hear me, madam?
Yes, sir. You are audible.
Very clear, sir. But unable to see you, sir.
Then to come, banks may come. Sir?
Sir, just now we can see the screenshot, sir.
Is it coming, ma'am? Auditing standard.
ಬೆಂಡೆಕಾಲ ಬೆಂಡೆಕಾಲ ಅಂತ
And all firms control and the firm person want to grow across the point of view to have for the peer review, but it is also
and this documentation should be on a timely basis, and audit procedures performed, relevant audit evidence obtained, conclusion reached. So this is the core of the this SQC, this particular peer review. This peer review document. First is audit procedures performed. What for each area, for cash and bank, for inventory, for receivable, for revenue, for sundry debtors, for each of the areas, what is the audit procedures, and evidence of work done. See, evidence of work done and evidence obtained. So you need to say how much sample you have checked, what is the conclusions reached. All this have to be documented. This is the very important thing is, if it is not documented, it is presumed to be not done. See, the rule is, when the peer reviewer and if you are not able to show that for material items for entire area, this area is with reference to assist in inspection. When you have documentation, this documentation helps in multiple areas such as planning, supervision, quality control review, record maintenance, and inspection. So this documentation standard is the most important standard, and I am sure that you need to have some sort of detailed exercise at your firm level to do this. Then this particular standard is with reference to fraud. This standard talks about fraud, and this fraud, see, if you find that there is a potential, though the auditor is not liable to find the fraud, but auditors, there is indication that there is a fraud, you are up to details. The auditor is responsible to get into details. He talks about two types of frauds: fraudulent financial reporting and misappropriation of assets. And frauds are, this fraud standard is a thing. Yeah, when I started, when this particular when I started my accounting career, there were big 12 firms, big 12 firms. Now they have become big 4 firms, because if the auditor is not able to see the going concern problem of a client, the auditor will have a going concern problem. So this I think there is some issue in the PowerPoint. Now I think it is coming. See, fraud has 2 areas. One is unintentional and intentional, and the auditor is supposed to exercise, precaution. And one area is professional skepticism. We need to see, particularly in the COVID environment, the clients are likely to create some sort of misappropriation or try to misrepresent the information. So we need to also have additional precautions while during COVID environment. But generally, the auditing expects us to have professional skepticism, and it has multiple areas like the discussion among the engagement team, risk assessment procedure, response to assess the risk of material misstatement, and it is another area like. This particular thing is with reference to money laundering and non-compliance with laws. So the audit has been held responsible. In fact, I should say that the Security Exchange Board of India and Reserve Bank of India and all those regulatory authorities which are getting into the fraud insist on what is the role of the auditor in non-compliance with laws, and if there are some violations on bribery and things like that. In fact, for people like us, we do audit for Security Exchange, the Commission of United States of America. Foreign corrupt practices is another law which is very seriously viewed. And though the auditor is not responsible for non-compliance with the laws of the client, but the auditing standard requires the auditor to see whether there has been some non-compliance with the laws by the client. So this is where anti-money laundering and other things are coming. And sometimes the non-compliance with the law may affect the going concern of the company. So this is where this in matters like coal scam and the issues like that, auditor has been asked to come and testify before the regulatory authorities. So this is compliance with the laws and regulation, and there is an auditing standard with communication with those charged with governance. This is another standard where where this you are supposed to write to the management that every year you are supposed to state what you did and what are the important points which you came across during the audit. So that is those charged with governance. So this is very important. You need to have a written document which says that we have done the audit in accordance with the auditing standard, and we have been, and these are the areas we have done audit, and what are the issues, significant issues. Oral communication is not adequate according to, and it should be in writing. And this is called we used to call it as management letter in our firm, but this is called communicate. This stands as those charged with governance. So you have to write a letter to the client. What are the observations you cross during the audit and how that has resolved, how it has been addressed in the auditor's report. This is a very important standard. The recent NFRA, if you see NFRA observations, this has been taken up by the regulator very seriously. And joint audit. So the next area is joint audit, and in joint audit, you need to clearly divide areas of work between the auditor and the audit firm. When the two auditors are there or more auditors are there, particularly when you do a very large bank audit and you have a branch auditor, and also if you are a central statutory auditor, there are 10 auditors or 15, you are supposed to have very clear-cut division of work. Mutually divide the areas of work and the findings of one aspect, how it has been sorted out, and this is a very big area. So this is about joint audit. Then the risk assessment. They are supposed to assess the risk in each, and there is an auditing standard on risk assessment, and what is your assessment of the assessed risk. Suppose in an election year you have political party contribution. In a very difficult year, loss may be shown as profit. The client is having a lot of cash flow problems, and he may be misleading the bank to show that inventory is existing when actually there is no inventory. You are supposed to do risk assessment, and that assessment has to be reflected in detailed audit procedures. This is part of the standards, and that risk assessment category has the following thing. The first one is the plan. So when this is a must document, when a particular auditor, for every audit you should have a document which shows the planning. That you have to have a document which shows that you have done planning, and that planning, what is the planning you have done, how you are going to do that planning, when are you going to do the audit, in what are the key observations. So if you do planning, I mean, in my view, you will be reducing the audit cost by 1/3. Okay, that is my experience. So for every engagement, there has to be a planning document. Then this is materiality and see the planning document. See, you should have documentation, which the documentation should show what is your materiality, because every audit we will not do 100%. So we will have to have what is the total materiality for that particular client we are doing. For example, I'll give an example that when I used to do an audit for a very large 5,000 crore purchases, I was making an adjustment of 8 crore. 8 crore I was going to adjust the consumption. So consumption got reduced or increased by 8 crores. But for 5,000 crore, it is not material. But later on, we come to know that net profit of the company is 25 crore, profit after tax. That means this 8 crore is material. So we need to, we cannot, materiality is also relating to the particular situation. It need not be that, that materiality is always this is all about risk assessment procedures, and but when you do when you do financial statement, for once you assess the risk, you are supposed to have assessment. What are those inquiry you have to do, observation you have to do, inquiry of others, analytical procedures. In relation to all these things, we need to have risk assessment procedure, and we need to consider the environment of the client in which the that particular entity is operating. So you have nature of entity, accounting policies, finance. For example, if a particular company is into cash related business, suppose you are doing export of prawns, your audit, but everything procurement of prawns may be cash. So you need to consider the industry in which that that particular business is operating, and you need to document it. And this is another big area: internal control and internal control and internal control. If you want to be a very successful auditor, the difference between a successful auditor and not so successful, helping the client to grow, and you need clients to grow, and this growing, you are helping your growth in internal controls. Internal controls, you need to tell the clients that if your internal controls are in existence, the controls will work, and they are working and will grow. So this is a very much we have an internal control questionnaire for each area issued by ICAI, and internal controls are documented, and those controls work, and those should be working throughout the day. What are areas in which you are supposed to have internal controls? Safeguarding of assets, variety of areas, payroll, purchases, inventory, so all revenue. So you need to have this internal control, but the internal control standards automated controls. Automated controls have ERP systems, so we need to take care of. And the internal controls standards, you need to see that the controls are working throughout the period. And see, my experience has been that if you do extensive testing, we do control testing, and this control testing, when you do control testing, these controls are existing throughout the period, working throughout the period. You rely on those controls. Once you rely on those controls, you don't need to do detailed. So this is why the internal controls are very important, and there is a very detailed standard internal controls. And my experience, I have convinced many clients to follow these internal controls seriously, and those companies have grown. And the auditor need not depend on his own word of mouth, but he can tell that these controls will help you to grow. And if you test the controls and you rely on controls, you need to document it, and you will do less substantive procedures. Then there is a standard on materialities, and the test of controls. There is a detailed standard on test of controls and how you will go about test of controls. IT systems are there. See, this is another area where the regulator is nowadays paying some attention, particularly when the controls are automated controls. So whether the controls are working, audit evidence obtained during the interim period, and previous audit. Sometimes you can also depend, because you don't need to check every area every year. So these are very large audits. We do it in alternative years, and sometimes evaluating operating of everything. So this is about controls. So you to test controls. You need to see whether controls are existing. If the controls are not existing or controls are not reliable, you need to do substantive audit procedures. So this is what the auditing standard says, that controls. These controls are documented, controls are tested, controls are relied upon. Then you can do less substantive procedures. But if the controls are not adequate, if the controls are not working, you have to have detailed audit procedures. That is called substantive procedure. The substantive procedures means you have to do a very detailed work. Okay. So the substantive procedures will take detailed audit, like you are rechecking everything, you are reperforming everything. So you are not relying on controls. So this involves substantive procedures. You need to have document on what are the substantive procedures, how you are doing. This is called detailed scrutiny and detailed audit. So not only during interim period you have to do that, you have to do at the end of the year also. During the year, during the interim audit, that is called, we call it as during the year, and end of the year, interim period and end of the year. And if you find that substantive audit procedures are throwing out that the entire central data provision is wrong, then you have to ask the client to rework it. So when you do substantive procedures, if you find that the sample is saying that your working is not reliable, then you have to misstatement. We call it as misstatement. Then you have to re-evaluate and you have to modify the audit procedure. So this is very important. Many times when we do file review, we find that there are papers in the audit file which says that this is not reliable, payroll is wrong. That means what have you done? Have modification of audit procedures. Have you increased size? So we need to the audit procedure. The audit procedures if the error it is high. And the efficiency and appropriate auditors, you need to have, normal, you cannot have a situation where the audit procedures require the auditor to do sufficient and appropriate audit evidence. The auditor is supposed to justify that what he has done working efficiently. If the next area is use of service organization. See, this is another area which a chartered accountant should explore. This standard is a very good method to give revenue to chartered accountants. See, in Hyderabad, in places like Hyderabad, there are firms which specialize only in doing payroll services for other companies. So many times your client would have outsourced some work. This is called use of service. For example, gratuity or payroll. So you have situations where the auditor, the client has outsourced the service to a third-party organization. For example, in very large companies like Google, Microsoft, and companies like that, accounting itself is outsourced. There is a company called Genpact which specializes in accounting services. So even the accounting services can be outsourced. So you need to check in those situations whether there are controls existing in the service organization. So if I am giving payroll to a third-party company, so every month I give attendance records, I give updation, who joined. So you are supposed to check that particular the company where the payroll is done. This is another very service line in the case of MNC companies. Suppose if I am doing audit of a particular company and that company is payroll is done by somebody else, then that payroll company should give me comfort that the payroll, they have internal controls in that company. So this is called service organization. So whether that service organization where the work is done, whether they have internal controls, how you will check that. So this is again a very big use of service organization. Then there is a separate standard. I'm not getting into this. See, this is the core of the audit evidence, test of controls and substantive procedures. I think I have elaborated this, that the standard says two areas, test of controls and substantive test. Audit evidence prepared by management experts. See, the standard said that if the management is doing, you need to assess whether, you cannot say that management did it, I checked it. So you need to check whether reliability of the information produced by the entity. So this is again, you need to work on that. See that. See, this is what the audit evidence says, that if the company says that if the expert, for example, I give payroll and I give payroll to a actuary, and that actuary is supposed to give me actuarial valuation report, then I need to check whether that actuary is a qualified actuary or not. and what is the information which this company gave it to him, whether it is right or wrong. So this is another area where the evidence is prepared by a management expert or a expert of the client. Additional physical inventory counting, there are detailed standards on physical inventory counting, and you cannot say that management did verification, I relied on that. But you need to also, as auditor, you have responsibility to see how you have evaluated with reference to the existence and usefulness of the inventory and valuation of the inventory. So valuation and disclosure of long-term investments. So these standards require you to get evidence on multiple areas like inventory and this is about inventory. Next is about litigation. Suppose if you have litigation and this income tax is outsourced to a lawyer, and then other matters are, so you need to write to the lawyers. You need to tell whether the lawyers have given you all the information. GST compliance, GST appeals, the status of all penalty. So all these things you need to follow procedures according to this standard. And the long-term investment, similarly, if you have stock broking, demat accounts, all of them have to be. You need the evidence that you write to them that they are existing and things like that. And then there is a separate standard on opening balance. I remember one audit, when I started the audit, the share price was 600 rupees, and we were appointed as auditors in that company. And when I started going into opening balance, I find that no document exists for opening balances. And the previous year, they paid the minimum alternative tax of 10 crore. And when I started getting into details, slowly, the audit took about 2 years. And I find that the entire last year turnover, there is no paper, and all debtors are not at all supported. And so finally, opening balance and current year, the loss is 250 crores. And last year also is another 250 crores. And 500 crore fraud finally was 2 rupees. So see, sometimes opening balance, the standard says that the auditor, if you are appointed as auditor this year, you are supposed to check the opening balance. This you have to have sufficient appropriate audit evidence has to be there for opening balance. So now with so many auditors resignations, and you can't jump and say, yes, I will become an auditor and take it, and later on you find opening balance has all types of problems. Then you will find regulator questioning you what you did. This is a very important standard. Opening balance, auditing of opening balances. So this is SA 510. Then we have a separate standard. No audit is complete critical review procedure. So you need to have, many of your practitioners, and I know that when you go for assessment, you do GP ratio and things like that. But when you do audit itself, you should do that. So it can be completed. You need to, for each and you need to have analytical procedures documented. So, and not only that, this particular standard says that analytical review procedure, that okay, I did analytical procedure, it is fine. This will give you corroborative evidence. This gives you corroborative evidence, and this analytical review procedure is a very important thing, and you need to have analytical review procedures documented, and for every account, payroll and PF as a percentage of basic, and inventory ratios, consumption ratios, all of them, input-output ratios. In the case of banks, whether it is the rate of interest is average rate of interest based on the balance. So you need to do that. And if this inconsistency, the ratio is wrong, you are supposed to do further work. See, I was doing one audit particular client, I found the number of teas consumed is 10 times per shift. Per shift is more than 10 times the number of employees inside the factory. Then we found a huge fraud sitting there in that canteen next year. So if the analytical review procedures gives you wrong indication, auditor is supposed to resolve significant variances in consistent relationship, resolve corroborative evidence, and it should be resolved and it should be adjusted in the balance sheet. And then there is a detailed standard on sampling, and this sampling, thanks to this statistical model, very detailed standards are there. Whether we are supposed to, so you are supposed to follow sampling techniques according to the standard, and sample design for each area sector. Suppose if I have a revenue of 200 crore, and that 200 crore has government sales of 100 crores and private sector sales is 100 crores, then I should have separate sample for both. So the standard is giving a multiple ways by which you get into sampling, and this standards you are supposed to have sampling, and you are supposed to check that what happens to the outcome of sample. Suppose if I have taken sample and then I found that out of my 40 samples, some 50% of samples are having errors, then I need to enlarge my sample. So I am supposed to increase my work. So this projected misstatement, anomalous. So this is a very big area. Sampling is a big area. Not getting into detailed thing on sampling. The next area is auditing of accounting estimates. The accounting estimates like depreciation, useful life, provision for doubtful debts, and the areas all fair value accounting all comes under auditing of estimates, and estimates are supposed to be audited by the auditor very seriously, because most of the profit and loss account adjustments comes through this particular area. So this is very important, because there is judgment involved in this, and you need to, and similarly fair value, auditing of fair value and fair value related things also you need to be careful. So judgments, if you have some disagreement with the management, you need to get that clarified, and possibility of management bias also you need to factor when you do judgments. The next area of auditing standard is written representation. See, you are supposed to get the management to write to you every year that they have told you all the truth, they have all the information, and all management assumptions, everything. So this is a written representation with reference to estimate. So very important, you need to do that. It is a standard on related parties. You please, as an auditor, tell you that there is an accounting standard on related parties. That is responsibility of the client. But this particular thing is the responsibility of the auditor. The related party auditing standard is more dangerous for the auditors than the related party standard on accounting. This is a very important standard, and you are supposed to, as an auditor, have documentation on related party transactions. All related party transactions have to be documented, and in my experience, related party documentation and compliance with auditing standard has been one of the key observations of many peer reviews. So please take care of this. And you are supposed to tell the management whether there are related parties, how they have dealt with the related parties. And many times they doesn't know anything of this related party transaction. You need to educate them on this related party area with reference to that the directors under which the companies under which the directors are interested, and relatives of shareholders, relative of directors, and the group company transactions. All of them have to get covered under this, and And if there are related party transactions which you feel that you don't know with reference to that, in that case, disclosure is very much important. And this particular standard is a very common non-compliance. Suppose we are doing audit in the month of October 2020 or 31st March 20. So we are supposed to have document to show that the events occurring between the date of financial statement and the date of auditor's report. We will be signing report in the month of October, November, December, or August, September. Many times people sign the auditor's report in the month of July, August, September. So what happened to the transaction between 1st April to 31st March? I mean the date of the auditor's report. So events occurring after the type 1 events, if suppose if my inventory on 31st March has become obsolete, I may have to make a provision, or some debtors have become bankrupt, or some. So this is type 1 evidence, type 1 matters. So type 1 events and type 2 events. In type 1 matter, you need to adjust it, and in the subsequent event, you need to take care of that. This subsequent event standard gives a very detailed treatment of how you go about making the adjustment to the events. If the event is giving some additional evidence to the balance amount on the balance sheet, then you need to adjust the amount. So otherwise, you need to do that. So this requires some amount of because this is a common non-compliance. So events occurring after the balance sheet date. This is a very big standard. And the next area is going concern. There is standard on going concern. This going concern standard requires the auditor to see whether the company's going concern is the company is a going concern or not. And generally, this going concern is with reference to 12 months from the date of the balance sheet. So this is auditor's responsibility with reference to going concern. I feel particularly in the COVID environment, when you are doing audit now, and then 31st March balance sheet you are seeing, one area which the ICA guidelines is talking about is going concern, whether the company is able to continue or not. Across the globe, the companies have closed down shop, retail companies have closed down shop, airline companies have closed down shop. So the auditor is supposed to validate whether this going concern assumption is there or not. Because if the going concern assumption is not there, then the carrying amounts reflected in the balance sheet are becoming inappropriate. So whether what is the auditor's responsibility is given there is the fundamental accounting assumption, and you need to, as an auditor, particularly in this environment, you need to document why you think the going concern assumption is still valid. Okay, so if you think, this is one area my experience has been tested very extensively. Wherever I've gone for audit, where I feel that as an auditor, I find that the going concern is not there, then the client first of all will threaten to sack me, think that if you are not able to think that you are going concern, you go away. So we need to we need to put a paragraph in the accounts that there is a substantial evidence that the company is not a going concern, or you need to say that we think that there may be some concern. Then the company has to say why it is a going concern. See, I have had experiences on this, and in fact, in certain cases where regulatory inspection has happened, where the company got into going concern problem, we have been asked to prove that how you have been sure about going concern. So going concern assumption is one of the important area, and as auditor you have to have document to prove that you have taken care of going concern assumption. And if you think going concern indicators are there, the significant losses are there, or cash flows are not there, or company's loss is continuously incurring cash flow losses. Now, I don't know how many of you are insolvency practitioners. Under company law now in India, we have insolvency code has come into existence. And this insolvency code says that if a company is not repaying the loans, if the borrower is not repaying the loan, or if any amount outstanding, the creditor can file for insolvency of the company. And the insolvency code, the NCLT will dissolve the company's board, and an insolvency professional will be appointed as the board member, and he will run the company. So in such situations, going concern assumptions becomes very, very critical. Auditor cannot assume. So particularly in companies where there is huge borrowing, you need to be doubly sure that the company is not defaulting the loan, or there is a liquidity problem there. So this is a very, now with the new insolvency code coming into place, particularly now the past 6 months and another 6 months, they have extended this insolvency code, not applicable during COVID-19 period. But this is increasing the risk of auditor's report, because we are going to sign on the balance sheet. Tomorrow, if the company goes bankrupt, the regulator is going to come and ask you, how did you sign this balance sheet? How did you not know that this company will have a going concern problem and things like that? So this is a very important standard, and you are supposed to have sufficient and appropriate evidence for going concern assumption that the company is going concern, and preparation of balance sheet and P&L account. And you need to, if there is doubt, the company has to satisfy the auditor whether how they are coming and how it is still a going concern. And of course, I'm not getting into this. See, so if auditor has to exercise judgment whether this company is a going concern or not, and eventually if the auditor is able to conclude based on explanation given by the management, then it is fine. But otherwise, you need to take care of it through a notes to accounts and also a reference to in the auditor's report. So this is again the standard requires the auditor to communicate to the directors if there is a significant issue with reference to going concern assumption, that the auditor thinks that the going concern assumption is not valid, then you are supposed to write to the board of directors, and board of directors is supposed to respond to your communication. This is another area is very, very important. Going concern assumption has been one big area of concern. And now I'll go to the next standard, which is called written representation. Written representation is management representation. That management is supposed to write to the auditor. There is a standard 580, SA 580, written representation. You are supposed to get a written representation from every client that they have given you all the information, and that information are true and fair, and they have provided all information in audit evidences. So this is a very important area. In every file, you are supposed to have a management letter and written representation, including tax audit. Even tax audit, for each area, for each clause, you are supposed to have a letter of representation. Recently, the ICA has come out with a detailed checklist for tax audit, and I think there is. I saw in that working group from Vizag. I thank the Vizag members and the Vizag committee for contributing to the quality of the profession, because this management representation is a very important area, and I'm sure that this management representation is there in every file. Okay, letter of representation. If the management is not willing to give written responsibility, then how to go about it is again given in the standard. So written representation has to be provided. And the next area is using the work of others. So others means other auditors and internal auditors and expert. So there are 3 standards here, and each standard have to be followed. If you are involving other auditors, suppose branch auditors or some country other auditors, subsidiary companies, suppose you have a consolidated balance sheet you are auditing, and that consolidated balance sheet you are depending on somebody, some subsidiary audit has been done by somebody else, then you have to write in the main report that you are relying on that person's work. So internal auditor is another big area. And if you see, every time when you do audit, you ask for the internal auditor's report. You see, you ask for how much work he has done. What is the nature, timing, extent of internal audit? What is the qualification of the auditor? Is there a planning done? Is there how much work they have done? So auditor, statutory auditor is supposed to go through the work of internal auditor. External auditor is supposed to evaluate the adequacy and of the internal auditor, and to that extent you can do less work and you can take the view. See, in fact, I remember in the case of Satyam fraud, the internal auditor went to jail. You know, not only the CFO went to jail, not only the managing director went to jail, even the internal auditor went to jail. So to some extent, statutory auditor will get more comfort, and the standard requires the external auditor to rely on the internal auditor. And the previous standard, I will take few things. See, if you have a branch auditor or subsidiary company auditor, you are supposed to examine the working papers of the other auditor and say whether the auditor is competent, component auditor, what is the qualification of that auditor, and how much work you are relying on. So this standard 610 talks about that, and then 620 which talks about using the work of an expert, work done by other auditors. See, when you are having an expert, that expert still see whether that particular person. See, I remember it is I'll tell you the name of the company, oil company, global oil company. That oil company, oil reserves are not existing, whereas the board of directors knew that these oil reserves are not existing, and still they went ahead and given the oil as though it existed, and the auditor. So when you depend on external experts for the purpose of valuation of some items inside the balance sheet, you need to see whether that expert is being provided with the data which you need to validate. See, as an auditor, you cannot say that expert gave, so hence you gave. What is the data used? No, Shell. I remember Shell. Shell is the oil company, and Shell had a lot of oil reserves. And you are all in Vizag, and oil tankers and things like that are there. So, what is the external experts' data given to him? And this includes people like actuaries and experts who are used for the purpose of valuing certain special items which you are not competent to value. In that case, auditor is supposed to go through the data used, assumptions used, and results of the work done, and the of experts finding. So this is a very area, and I am going to share this PPT to all of you. So you don't need to think that this will come by email to you, and your branch I will request the chairman to send it to all of you. And the next area is audit conclusions and reporting. The auditor is many times I find in the case of many auditors, they don't even keep the signed balance sheet in their file, and you are supposed to have audit conclusions. Once you do audit planning, audit procedures, what is the details of work done, what is the outcome of work done, and what is the additional work done based on outcome of work done, and what are the conclusions reached. Then you are supposed to get into the overall conclusion that has to be documented. Audit conclusion means before reaching final audit conclusion, you should see all the evidence which you have collected have to be reviewed by you, and that summary of observation should be in one document, one complete document. That should be the evidence based on which you will reach audit conclusion and reporting. And comparatives includes the previous year. So audit report, a clear written expression of opinion on the whole. So you need to have draft auditor's report, you need to have final auditor's report. So how you reached into the conclusion, qualified, unqualified, modified, disclaimer of opinion, all of that is given in the standard: qualified opinion, disclaimer of opinion, and adverse opinion, and comparatives. So if you have last year figure and current year figure, there is a separate standard. So this is a detailed standards on comparatives. And review engagement, suppose you are doing quarterly financial reporting, that is review engagement. So there is a separate standard on review engagement. And see, I have seen a lot of disciplinary cases initiated against auditors for signing balance sheets which are going to banks, just to put one stamp and sign. Nobody knows what you did on that. And I remember many banks. In fact, I was once I got a call in Central Bureau of Investigation, and they gave me all the information, not with reference to my firm or my work, but some other auditor. He has signed a balance sheet or signed some report, and the bank has given a loan based on that paper, and bank manager is in jail, and company people are in jail, and they want to put the auditor also in jail. But I have gone through that report what the auditor has signed. That auditor has not done anything except stating that the auditor has certified the balance sheet paid up share capital of the company. That's all. So he has just stated what is the paid up share capital of the company. But when the auditor is asked to produce the paper to show that, no, the auditor is unable to produce that. So, but the CBI is suspecting that the auditor and the company are in hand in glove. So, whereas the company and the bank has taken a view debt equity ratio or something like that, and they have released the loan based on that. Nobody has understood that whether the company has a loss or not, whether the reserves and surplus exists or not. Only paid up share capital certificate, they have taken it, and they have gone ahead and given some loan to the company, and there is a big fraud sitting there, and both the banker as well as the company executives are in jail. And see, you need to, when you sign a balance sheet or when you sign something, you should write why you are signing what you are signing. These 4 standards are very important. Engagements to perform agreed upon procedures. Engagements to compile financial information. For example, if I am doing accounting and I am also doing auditing, I am not supposed to audit actually. But there is a separate standard, SRS 4410, engagements to compile financial statements. So if sometimes tomorrow or later on the company can say that the client may say, no, I don't know anything, audit only compiled. They can fully take standard that 4410 says that you have compiled the financial statement. So you need to be extremely careful with reference to doing accounting services for the same clients. When you are doing peer reviewed, when you are being peer reviewed in the books of accounts, when you get fees, you cannot have fees for accounting as well as auditing in the same books of accounts. So these 4 standards are very important. Engagements to perform agreed upon procedures, SAE 3400, examination of prospective financial information, forecast. So you are supposed to state the assumptions. What is the validation of those assumptions? 5-year projected financial statement. So this is not an audit of accounts. It is only prospective financial information. So there is a separate standard on that, how you go about it. So these are the broad areas I thought I will share with you. But I thought See, I'll give a case study for you. So this is the first document, which is called planning document. You should say in the planning document what and all should be there. Say in this planning document, you should have these 5 things. Period, which period I am doing audit of 31st March 2020, and for this company, what is the background of this company? This company is a private limited company. This company is in the manufacturing of this. So much the current business position, financial indicators. This document should be ideally prepared in the month of April, May, June, July. First 4 months, once you are appointed in the AGM, you should have this document. Immediately, you should have this document. Significant audit matters. And what is your audit approach? What is the materiality? What is the audit timetable? What is the meetings held? What is the staffing and budget? Prepared by, reviewed by, approved by. So this is a must. See, in every planning document, these factors have to come. So I am giving you time. You can note down. So period of audit, background and scope, current business plan. Then this has to be existing in the planning document. Each planning document should have these 10 points or 10, 11 points. What is the staffing? Who will do the audit? When they will do interim audit, final audit, and year-end verification of inventory, data circularization of data, prepared by, reviewed by, approved by. Then summary of audit points. See, in the audit file, you should have for each section, you should have audit programs and detailed work done. In addition to that, in every audit file, you need to have summary of audit points. So summary of audit points, I'm sharing it with you. See, I think there is a link issue. One second. I'm just reloading this PPT. So summary of audit points should contain all the significant points of all the sections should be summarized, so that you are able to take a complete picture of what you have done at the end of the summary of audit points. I think connection issue is there. 1 second, I'm just connecting this PPT. Hello.
So, hello.
See, in the summary of audit points, I would say the points are the company the same way. Summary financial statement, significant matters for audit has to be addressed, and all resolved items, unresolved items, how you have dealt with each of those points have to be given in that point. No. Other matters, analytical review procedure should be part of this summary of audit points, and summary of unadjusted errors. Suppose you have decided certain things, you will not adjust in the financial statement. That also has to be there in the summary of audit points. One second. So in the summary of audit point, these are the areas which come here: background, say, summary financial statements, resolved matters, other matters, analytical review procedures, summary of unadjusted errors. So this is a very big document. This is important. I want all of you to note down this. See, all of you who are attending this seminar, please write down this. Apart from planning document, apart from summary of audit point, this document should be part of the audit file. So one is communication by the auditor to those charged with governance. Subsequent events should be part of the file. Okay, this generally people don't have this document. And the next area is letter of representation. And the another area is audit report. Audit report should be there in your file. And board resolution saying that they have adopted the accounts. See, many times we find that the company has to adopt the accounts in their board meeting. And that board meeting resolution should be in your file that I have adopted this, board has approved the accounts. Okay, with audit report, with the draft auditor's report, with or without qualification. And signed financials. Many auditors don't keep the accounts, signed accounts with them. See, this is again problem. You get into a problem if you don't have. These are the minimum documentation which you should have in your file. And I would welcome questions. I think I am going to, 1 second. I want somebody to read out the questions. If there are questions.
Sir, as of now,
Madam,
we have not received any questions in the chat box, sir. If members are interested to ask any question, they can unmute themselves and ask.
See, I think if they are not having much questions, I will get into that presentation. One small presentation I have. I thought I'll share with. 1 second. Can I this particular presentation?
Yes, sir. Yes, sir.
Because I so today clients are having challenge, business challenge. The business is just starting. See, many businesses have restarted. Many businesses started in the month of April, May, June, July. But some businesses have not even restarted even today. See, one area is customer focus. Customer focus is whether people are looking at revenue. See, the businesses have to look at how to create revenue. That revenue has few elements like customer wants, customer needs, customer aspirations, customer demand, how to meet customer expectations. And the last one is customer experience. Today, when people are working from home and a market like Vizag may not have this issue. Connecting with customer becomes very crucial. Whether businesses are getting into connecting with the business. So how are you going to attract customers to your business when you are in a remote mode, business implication? So this is a very, very big area where people are looking at. Right now, big companies are focusing on that. this is another big area. This is getting today, though the government of India, this presentation, madam, I will send you one link, madam. This presentation is there in the ICA website. I will just run through this presentation, but the detailed presentation can be seen by the members in the ICA website, madam.
Yes, sir. Yes, sir.
So one area where chartered accountants can help the businesses is to get cash flows in that order, whether the short-term cash flows or long-term cash flows. So today banks are willing to give additional liquidity, and whether you have approached the bank on behalf of your customers to clients to have more liquidity, whether credit limit, ODs, so this entire liquidity is a big issue. And though the government has given a lot of relaxation and a lot of liquidity measures, but at the branch level, the people are making slow decision making. So we have, as auditors, we need to help clients to push them to go to the bank and take support. And the next area is digitally enabling the business of the client. See, today, digital is the order of the day, and many clients, whatever is supposed to take place, whatever the digital thing which is supposed to take place after 5 years, today only it has come. So the people who are people are working from home, and every company is working on how to digitally enable the business. Okay, so how do you hardware, software, remote working? For example, now also I'm still I am still having this challenge because thanks to this Hyderabad rains, our network connectivity has been really poor. So digital enablement of the customer, whether hardware, software, remote working, enabling the staff. So whether business continuity plan, security risk. Actually, one area is security risk. Today, cyber security has become a big threat. I don't know. I am sure I have a very high respect for chartered accountants from Vizag for doing lot of advanced work, and you should do some area for security risk. For example, cyber security is a very big practice. So people are spending millions of rupees on cyber security, and security risk is one more area which I thought I will share with you. The next area is platform optimization. Platform optimization means whether the digital platform has a speed, whether it is working according to the speed at which it is supposed to work. E-commerce platforms today, 1 lakh crores has been obtained by Reliance Industries. So this digital platform, IT infrastructure and IT upgrade, so communication with IT service provider is another area. So this I thought I will share with you these 3 points: the digital touch points, digital working, digital ways of working, virtual enablement, productivity optimization. Today we chartered accountants are better than these IT company employees, because the IT company employees are working overtime because they are working from home. The companies are treating them as though they are available for them digital infrastructure. So this detailed presentation has been uploaded. I will send you the link, and all those members who want to use this particular detailed presentation for the purpose of advising their client can go through that. And I have 3 more points there. One is supply chain. One is relating to suppliers, how suppliers are ready or not, working capital management and things like that. Then the next area is supply chain optimization. Then workforce, whether digital workforce, how people are working from home, how it is affecting digital employees, how people are getting, today your article clerks need not come to your office. So now, thanks to the government of India also, you have faceless assessment. Now your practice is also undergoing lot of change. In fact, today there is a Supreme Court case in the case of Tata's. So everything is happening through digital mode. So now you need to digital workplace and digital workplace and digital workforce. So though the public has been allowed to come to the road, this COVID-19 has not gone away. So I would advise you to be cautious, and I would suggest to all of you to see that you people are safe. So I would end my presentation with this and wait for any questions to come, if there are some questions. In this supply chain, I have covered these points. Supply chain, this detailed presentation is there. I will send you the link. Workforce. Whether people are complying with public health requirements, legal compliance. I will complete. This is the very interesting joke which is happening now. People are not willing to sit at home. They want to go out. So,
Hello.
okay.
So,
I think my Zoom connection is gone again.
but we can hear your audio, sir.
Yeah. That is the
Technology. We are using the technology digital era.
No. See, at least one thing is there. Definitely the benefits are going to be high using technology.